All right. Good morning to everybody. Just making sure we are all set across the board. Just can I get a confirmation that we are live on YouTube? Because I am not seeing the stream. Okay. Okay. Well then, let's go ahead and get started. My name is Jared. This is Engineering the Markets, and it is December 15th, 2021. So we've made it through about half of the final month of this trading year. Congratulations to everyone still with us. You've obviously been either successful or you've learned a lot this year. And as we await for today's economic calendar event, more specifically the FOMC and the Fed chair minutes, we are looking at a market that is poised for potentially a larger move into the remainder of this year. Now, where this move is going to be focused in is one of a bit of sort of pause. We saw some adjustment of stock valuation and price levels on yesterday's session in some key underlyings. But overall, the market as a whole had done a particularly interesting sort of repair operation, coming back into a previous gap inside of the S&Ps, and the NASDAQ, of course, filling that gap and having some downside continuation. When we look at our SPX expected move on the week, we note that this expected move for the entire week still remains marked off at about 79 points from Friday's close. And as we are looking at yesterday's session, we see that we had a minor breach of this area, but the market did what is essentially the more probabilistic event, and the market was able to draw back into that expected move, albeit very briefly near the close. Now, what this looks like on an intraday session is you often get larger responses near this risk level, not necessarily in the way of support and resistance, but the market is just hesitant to move outside of these bounds. And usually when you see breaches of these bounds, you can often look at things like volatility products and start to see them appreciate at the same time, essentially showcasing that the market is starting to advance away from the expectation for the week. And that advance in the market can lead to people starting to hedge depending on the structure of their risk portfolio. So when we see the market have these breaches with a lack of follow through, it's a normal response to these option expected moves. Excuse me. It's essentially the more likely scenario for the market to take. And as a trader, you can often look for some other technical structure to basically fade the market back inside of its probabilistic zone. Essentially thinking about a standard deviation curve, once you get outside of that 70% likelihood range, the ability for the market to sort of come back into range is often a bit of a fade type strategy, something that the market tends to gravitate towards. Now, another structure yesterday that was interesting was, of course, the gap. We know that over the past last week's session, we had a large volatility event that drew the market down into a corrective phase. After that correction was over, we saw the volatility subside rather quickly. The market created what is known as a structural gap, and that gap had yet to be completely filled as of yesterday's session. So when looking at a market that is gapping into this area, one can theorize that that gap may be starting to repair itself. And as the market sort of explores those price zones for the first time in this position, you can look for things like full gap fills to the downside, along with the alternate response, which is often the sort of bounce away from a completed gap fill. So um, this is more or less a short-term tradable event. I've gone ahead and sort of marked what that looked like inside of the SPX. And you can also see it inside of the SPY. We pull up our daily chart and just acknowledge that this lower wick here is not actual price action. It's a bit of a misprint inside of the chart. So what we're looking at is a market coming into this void or this zone with a lack of liquidity and a lack of price exploration. Markets are often drawn through these voids as they enter them. And then once you reach a subsequently higher liquidity zone, basically crossing the gap, you can have the alternate response, the sort of bounce away from a completed gap fill. Now, this looks like basically a pull down into the market lows and then the subsequent response back higher, both of which are, of course, tradable activities in the short time frames. But when you're looking at this completion or this possible completion of a gap fill, you may want to also theorize what structure does that gap represent. As the market pushed higher, we got a little bit too ahead of ourselves. We became a little bit irrational in the exuberance of the recovery of the market. And when we did that, we ran right into our daily high resistance or our range resistance for the S&Ps. So when the market found this resistance and was unable to continue advancing, it often comes back and checks in or corrects and repairs any sort of structural deficiencies while still inside of its trading range. A lot of people can sort of think of this as maybe a bit of an exhaustion type gap, albeit we're still within a trading range, so that exhaustion gap doesn't quite match up with the trending activity that you see near the end of a price trend. So instead, we can look at this gap as simply a period of exuberance. The market was able to recover quickly once volatility subsided. And now that we're getting into a new binary event, the FOMC discussion this afternoon, this repair structure has been completed or near completion. And we can look for the market to basically decide using this risk parameter of yesterday's session. The decision to advance or decline is going to be based quite heavily on how we break yesterday's daily trading range. Now, just to note that gaps can be repaired in different ways. The NASDAQ also had a structural gap, and the NASDAQ has a bit of a less defined trading range over the past couple sessions, more of a slight fade lower as we've been testing the 50-period moving average during this correction. Now, it's notable that we did come into this gap region and see a bit of a stall in the intraday session. That's going to be closer to sort of the morning range highs. But as we continue to fall on yesterday's session, the NASDAQ showed some of that relative weakness that we've been commenting on over the past couple of weeks. Now, this isn't necessarily something that we're going to see across one or two stocks, but what we're often seeing is a bit of a bifurcation or different stocks advancing and declining in the NASDAQ at different times. Depending on their market cap, they can affect the NASDAQ as a whole in structurally what looks like a bit of a daily downtrend or just something that is still more in a corrective phase in the market. So, for example, stocks like Microsoft yesterday. the likes of this gap down and this continuation that we've seen so far, closing not necessarily at the lows, but coming into our sort of trending support. This downdraft, along with stocks like Google, which had a similar gap down and decline on yesterday's session, albeit we did recover quite well. All of these are just short-term effects that can sort of bring the NASDAQ into a position of defense. You counter that with stocks that we know have been strong, but have started to fade from the highs. They're not necessarily all out bearish near the highs, but we're seeing those exhaustion signals, the engulfing structures near the highs, and ultimately the lack of follow through after an extended advance. All of these are bringing pause to the NASDAQ, along with an equal weighted view. If you pull up something like the NASDAQ equal weighted ETF, this can show how the advance or decline of different stocks inside the NASDAQ is not necessarily one-to-one. Lots of NASDAQ stocks have actually been on a steeper decline as of late. And some interesting statistics have come out recently showcasing that because the NASDAQ is so heavily weighted in larger market cap names, away, for example, the top 5 NASDAQ market cap candidates, a large portion of the remaining 95 stocks in the case of the NASDAQ 100 are actually either down year to date or just not necessarily in such a strong position overall. You would not claim them to be very bullish stocks as a whole. So it showcases a bit of that market cap distribution inside of these ETFs. And it's one thing to always keep aware of when we do these larger index analyses. They're not necessarily fair in the way that we evaluate the technical structure, because ultimately larger market cap names control these ETFs much more heavily than other names that are less impactful. So as we move into this this trading session, just wanted to note that while these larger names might be postured a bit more bearish or exhaustive near its highs, you can look at shorter term sort of volume profile to get a sense of essentially the market getting ahead of itself. And that's often where you're going to see sort of the lack of follow through, the overextension and the exuberance, which leads to sort of your fade or short term downside plays. Essentially stepping in short even on an advancing market when you know that the extension is getting ahead of itself, and playing towards either value, which in case of a volume profile you can see on a stock like Apple sits around 175, and then even more so if the market continues to decline, you're basically playing from high to low inside of these VA ranges, these volume area ranges that represent a distribution of the trading activity, in this case over the past 10 days. Now, obviously, the farther out you look, the more data is pulled in, the more away from VPOC you tend to be, especially on a trending stock, because you often see trending stocks move away from larger value zones into new regions of price exploration. And this is just how the market works. The market tends to establish bases of support, value, and the market essentially transacting relatively flat for periods of time. You get these breakout and range exploration events, and the market starts to transact higher or lower. We as traders are looking for those moments in time whenever the market is getting either ahead of itself or too far away from these zones, and trying to play the move back into them, along with respecting the overall trend, as it is a very strong indicator of price to come. And that, of course, can be seen very heftily with Apple, albeit the trend became more accelerated as we broke away from our previous trading range. So it's just one of those stocks that has really clear structure in regards to how to play things as they come. The likes of Microsoft as well, if you look at a short-term time frame, these high to low expansions, sorry about that, these high to low expansions, once you get your signal to essentially go long or go short, they offer excellent risk to reward because the market volatility has been quite high. So you can have sort of your daily uptrending stocks still putting in sort of that upper bound of its trading range and then looking for those markets to fade either back to value or in the best case scenario to transact through its sort of distribution range to the downside. Now, one thing to note here is that while we looked at some key names in the tech sector, a lot of stocks right now, especially some of the larger market cap stocks, are actually sitting around VPOC. To me, this is indicative that while we've seen some back and forth volatility, especially just in the 10-day session, you can see the type of appreciation certain stocks have had. We're talking about 10 to 15% appreciation from low to high in the case of some of the most oversold stocks in the market. Here I have the Meta platform, previously known as Facebook. But when looking at the perspective of volume profile, you can see that the larger value zones are actually where we're sitting. So we've basically done a full transition in this time frame from low to high, and now we're sitting back at sort of a starting point, an area of interest that the market can choose to continue advancing from, or basically come back down and back test or fill back some of the structure that we've seen. That, of course, will be indicative of what we get today in some of the comments from the Fed. So across the board, these names are going to control sort of our shorter term price activity. They're very heavily weighted. We've seen some volatility increase leading into this event. This is relatively normal. It's a binary event. Market knows to sort of hedge some of that risk away from this activity. We get some elevated moves leading up into and shortly thereafter these events, regardless of how they are priced in. So a little bit of a volatility expansion in the VIX. And of course, our our volatility futures here showing that appreciation, which can be seen inside of things like ETF, leverage ETFs like the VXX or UVXY. These are very sort of short-term plays for either some minor hedging activity, along with just looking to see where some of the hedges are concentrated. The VVIX as well, just showing that premium appreciation and the willingness to pay for volatility exposure. So last but not least, just commenting continual defensive nature in the market, consumer staples, utilities nearing its relative highs, the likes of healthcare continuing to break out of its short-term structure, and the hesitancy of our key tech sector, the hesitancy of our consumer discretionary sector, and the value assertion of certain key names. All of this leads us into a market that is awaiting information before its next major movement. We want to be focused on where strength is currently, and we want to be prepared for that strength to change. This has been sort of the theme of the week as we've seen the market stall near its all-time highs, near its resistance points, and we're seeing that lack of follow-through. A lot of people are starting to assess whether there's much more upside priced into this market before we see something of a more significant correction, basically a return down to key price levels that we have not seen in such a bullish uptrending market. Another thing that people are starting to ascertain is what sort of risk on profile does this market advertise at the moment? And for that, we can look at things like some of our small caps. Now we know the IWM has our dominant our dominant range structure. But short term, we need to be cognizant of the lack of follow through on these bounces. We need to be cognizant of the fact that technically this market has not gotten to its true extremes quite yet. We're looking at sort of relative lows on the most recent bounce, as opposed to some of the more extreme lows near the range extension. And ultimately, as this market is sitting below key moving averages, not only sitting below them, but rejecting against them on the most recent bounce, we need to be prepared for this market to continue to downtrend. Basically, to have that sort of risk parameter inside of our theory, and ultimately looking at a market that is advertising a bit of a risk off profile in this moment in time. We're not seeing the same advance in small caps. We've obviously got our false breakout look. That is a bit of a warning sign to this market. And while we could come lower before seeing a strong bullish response, being prepared for that event as we are testing relative lows is part of our trading plan for the next couple of days. So keep an eye out for breaches near these relative lows. This market is postured probably the weakest overall, as the SPY has, of course, tested its resistance highs, and the NASDAQ is near that 400 psychological, having trouble, of course, breaching it in the short term. And then our Dow, sort of a mixed bag, of course, but the Dow showing a bit of relative strength in the most recent sessions. These advances are not only holding near the upper balance range, but even though we are not at all-time highs, the most recent rally is structurally dominant over the past week. So that is worth mentioning and worth calling out. Okay, so as we sort of wrap up today's session, wanted to see if there was anything of interest for the Bear Bull Traders chat room. I'll be looking maybe at tickers or maybe some questions, but ultimately a shorter session today. Not much to report since we are in a marketplace that is postured so defensively. We're awaiting information from the Fed. We still have all of our normal risk parameters elevated. The dollar continues to be in a bullish uptrend. The bond market has returned to sort of a stall point, or quote unquote gravity, in the way I like to sort of define it. And as we're in this trading range, there's less of a directional bias. Therefore, we can sort of await for that information today and only trade maybe short-term plays as we await the information. So one name that was called out was Affirm. This bid yesterday. Worth noting that this stock is in a very clear daily downtrend. We're coming into some 200 period possible support. This area hasn't really formed fully on this particular name since it is a SPAC, but we're also coming into a lower volume zone. So when we look at names like this that are clearly downtrending, we kind of want to look for some short-term signs of strength, especially if you're looking more towards the long side, because ultimately these support zones have been broken time and again. So we're getting a bit extended to the downside. We're obviously maybe looking at some indicators, something like RSI, not really at extremes yet, but the MACD might have that short-term cross forming, which basically means that we're getting close, but we might not be at the relative low quite yet. At which point this market doesn't necessarily need to go bullish immediately. can actually go a bit sideways. And that would be indicative of reaccumulation before coming back to upper value zones. So certainly looking at the retracement line, and short term, probably just looking to see if one of these moving averages can be breached. You want to signal something like this, where the market is giving you at least an hourly possible uptrend change, something that sparks a larger than average move. Let's see. So some of these questions I'll answer in the chat. They're not really relevant to the morning evaluation. The Fed announcement is going to be occurring. If I take this off, clear this filter, you have, let's see if I can find it. Not too far out. Oh, wrong day. There it is. Okay, so 1 p.m. Central, 2 p.m. Eastern. So push into a zone of apparent range. So we're looking at Walmart. This will probably be the last ticker. We are right at the edge of that time. I certainly like the way volume is coming into this move higher. There's room to sort of test the beginning of the sell-off, and that's going to be somewhere around this inflection point, this sort of pivot area in Walmart. The hourly uptrend has started, and obviously we have our higher lows set, the moving average cross, which can spark these larger than average moves. And if I look at just some longer time frame, that structure looks to be pretty good. So you're basically looking for the hourly uptrend to give you some reason to consider it starting to break down, at which point this move is probably over and you'll see more of the chop or the back and forth trading. So high to low, higher low setup, moving average crosses, and then the spark in volume to get this trend going. Looking really good overall, but the upside at this point is a bit limited as we're getting into our pivot range. And that would mean that we could easily sort of test lower supports once we get to this resistance. Okay, so that's it. We're good for today. We'll go ahead and shift into pre-market prep. As always, thank y'all, and we'll talk more tomorrow. Stay tuned for pre-market prep as always, and trade safe. Be aware of that volatility coming today and be prepared for it if you are actively trading during that time. So we'll talk more then. See y'all tomorrow.
All right, let's see. Good morning, everybody. How's everyone doing today? Hey, Rav, what's going on? Good morning. Good morning, everybody out there. Good morning, YouTube, everyone out there. Hope everyone's having a fantastic morning. Hope you're having a good morning today, Norm. How was your day yesterday? No, I don't have Norm yet. I've got his info.
That was me, not you. I had myself
There we go.
muted in vMix. Sorry about that. Seems my camera's still messed up.
Oh, man, sorry about that. I'll spend
Moving
some
me in
time on that
slow-mo.
today. Get that figured out. I don't know what's going on with that.
So, yeah, no, day was fine. I really, frankly, don't anticipate much trading for myself today, considering 2 o'clock it will be FOMC statement and policy deal. So probably a little bit of a flat, choppy morning, which is what we see on the gappers anyway right now.
Yeah, for sure. Yeah, that definitely seems to be in line with that. Going over to the gappers, as you guys can see here, we've got some symbols popping up here. Nothing really jumps out at me other than Baba and Roblox on the gappers down. Obviously, some names I know, OCG, and I've seen before, but I generically don't trade. But that's pretty indicative of what Norm's saying here, because if we go over to the SPY today, we can see what happened yesterday, which is very interesting, actually. If you were watching Engineering the Markets with Jared this morning, one thing he was kind of talking about was, this posture that it was looking at the market. And I read yesterday as a very, very big indecision day. But it's interesting that we have elevated volume on it. Now, if I go back to a 15-minute chart, so I can see what happens yesterday. You actually see yesterday when we bottomed out, we threw indecision, and then we had this very bullish engulfing candle come with high volume. And we actually pushed on very high volume all the way into the close and closed on a big hammer doji at the end of the day on quite decent volume. So I'm going to be really interested to see what the SPY does. If the SPY can hold here and then make some new highs, maybe prove those to be some buyers, some bulls, turning the printers on, maybe we actually get a bit of a rally today. Can't make an assumption there, but that's certainly very interesting. If it rallies up to around 465 and breaks, then we could go back through our 4 on the daily, have a really good time with that. So speaking of a good time, I'll pop out for a second here and there we go. Show you guys a little bit about what happened yesterday on a couple of our tickers that we looked at. As we know, I said yesterday, SPY, we sold down and bought up. We had a lot of tickers on point. AMC provided a glorious breakout off of S3 yesterday. We kind of had this one dialed in pretty well, had a lot of folks in the room get a piece of this nice bounce on AMC, really good. Neo ended up being very choppy in the day. If you shorted it at the open, you got to move. But basically, if you didn't get your move in the first 15 minutes, it was a real pain to trade. XPEV, which, these are a lot of these China-listed stocks, and it just shows the indecision that's going on in that market right now. And this
I
might
don't
be
think there's.
reason.
I'll tell you, I don't think there's indecision. I think that market is toast.
Yeah,
Those are all gonna. If you go and you research this, most of the wise people think that all the Chinese stocks will be delisted from U.S. markets within the next 3 years. So
yeah, so and that's quite a catalyst. So hard to imagine. So I mean, LSID pushed. I think Nvidia, chopped a little bit. Piton ended up having a really sweet. So this was for our pivot traders. This one was a really fun one because you actually opened right down near the extreme, and if you took your long off of S4, which is something we do, actually got almost a pinpoint move to R4 that day. It was pretty incredible. So I know a couple of my trading buddies caught a piece of that. So, and then everything else, travel sector, other than that, kind of Baba had a nice little move. So that's kind of where our list ended up being for the day. So now let's go ahead and pop over. We'll take a quick look at a couple of gappers, and then we've got Creta on today. So I'm very excited about that.
Can you throw up the SPY slide?
Yes, I can.
With all the economic data on it. Yeah. Be sure to hit that.
All right, so there's a SPY. we'll put a 15 on this one. And we'll put actually we'll leave it at 1. And then we'll put this one back at the daily. Cool. All right. So
no, never mind. There's a slide that we have that has all the economic data on it.
Get your pulse going.
So 8:30 we had retail sales and retail ex autos, import price index and excluding fuels, and the Empire State Manufacturing Index. Those all dropped at 8:30 when we were just cranking up the show. Retail sales and ex autos came in roughly as expected, I believe. Excuse me, I take that back. Retail sales came in lighter than expected. Import price index came in roughly as expected. The big news that we've got the National Association of Home Builders index coming out at 10 a.m. Who knows what happens there? Interest rates have been on the rise, so that's been hitting mortgages just a little bit. The big one, obviously, 2 p.m. FOMC announcement. I'm not anticipating much going on before that. That'll probably cause the market to go a little bit haywire. And then, of course, shortly after at 2:30, as always, Jerome Powell's press conference. So we will see where that leads us. That will, in all likelihood, guide how the market acts in the next couple of weeks if we get a Santa Claus rally or any of that.
Yeah, man. Well, that's certainly good information there. So I know for me, whenever on these days where you have the minutes and then the JPOW afterwards, it's very often that you can see just these very kind of choppy, interesting days going in. So, we'll have to keep an eye on SPY today. Obviously had a really indecisive day yesterday. Today we can be, we could be looking for with this indecision, we don't really have a clear idea of where we're going. Right now, the way I read markets, right now we're undervalued. We're under this breakout range. So if we back test and then move lower, could expect more sell-off. So it'll be interesting to see that. So let's get over to our gappers list. First, let's hit the gap.
Before you hit that, I'm going to answer one question that Jason W. threw up. Does that mean one can assume they may become attractive for shorting Chinese stocks I'm referring to? Personally, I just won't touch them. I mean, maybe for short scalps or something. There's no way I'd hold any of them overnight right now. Of course, I'm risk adverse that way towards Chinese tickers anyway. But it's hard to answer that because the Chinese government can come out and decide to screw U.S. investors at any moment they deem fit. Say, oh, we'll come into compliance. We'll let your auditors do what. Yeah, I mean, they could just want to,
Yeah, I agree with you.
Do whatever they want.
I think it's either position would be a very risky position.
Yeah.
So, and I think most of our longer term position participants can be more risk adverse than that. For certainly, they're not going to want to even hold a long short in something that could just get squeezed like crazy if a certain news comes out. That'd be nuts. All right. That's a good question, actually. So to start off, we have BFRI, Biofrontera Inc. Floats a little high at 3.6 million. Just kidding. So floats a little low float for the fund, 681. We got news on BFRI. Let's clear our list here.
Nothing fresh.
Nothing good.
Nothing as of today. I haven't seen
right.
anything in the last 2 days. Lower float, high short float. It's been on the move the last couple of days. I think it's just still acting on some of that.
One thing I don't like just right off the eye on BFRI, even if you do are into this low float stuff, which I generically don't play, is notice every single day it's moving and then it gets stuffed right back down, moves and gets stuffed, moves and then gets stuffed. It's going to be a very, very difficult stock to trade because it's going to be really hard to get a correct direction on this thing. So for me, I'd probably hang
OTC is pointing out there's some garbage analyst rating increase. So.
So we can put that I'll put it on the bottom, the low float list, and if anyone wants me to run some levels on it later, I can. CFVI, which is CF Acquisitions, looking kind of blocky, algo-y right now in the beginning. Daily chart, a little all over the place. Volume super low, but making some really I don't like the daily chart on this one. Anything interesting with CFVI there, Norm?
I'm not seeing anything specific. It's a SPAC. I'm not seeing anything else
I don't
this
like this
morning.
one. I don't like this one at all.
It's just kind of garbage.
Yeah, I'll go with
as of the
garbage.
moment.
Speaking of, Eaststone acquisition had a crazy day yesterday. I mean, 22 million, which for 14 mil, almost double traded its float yesterday. Big move to 26 and then got stuffed all the way to 14.50. Not sure if it provides opportunities today after all of that. So, man, shorted up here, though, would have been a fun short. Pre-market volume, horrible. Level 2, looking a little not great. So I need to get my spread up here. Bid-ask spread. Yeah, 30-cent spread on a $14 low float. That's pretty aggressive. All right, anything worth notable on Eaststone?
Negative.
Negatory. Bellis Health Incorporated had a big day 2 days ago. I think I remember seeing this one on the list. A lot of volume. Held the next day on low volume, consolidating. Not sure if that means we get a third day play out of this thing, or if whatever news was driving it just fizzled. Let's see here. Did not trade very well yesterday at all. If you're into a lower, it's 67 million. We're getting a little more float there, but if you're into a lower priced one, I'll put this down here and I'll run levels on it later. Is there any notable news on there, or just still carry over from whatever happened on the
They
13th?
popped, announced a secondary. They've now priced their secondary. A lot of times that'll cause them to pop back up a little bit from when they announced it. But other than that, I mean, it's a garbage catalyst, really.
Yeah, for sure. Offerings are difficult as well. Roblox. Roblox has some volume coming in this morning, so it actually is trading actively, so it's in play, at least to a degree, so that'll make it worth throwing on the list in one way or another. Roblox, I've had difficulty trading, to be honest, but when it does get a good move going, it can provide some opportunities. Is there new news on Roblox, Norm?
Yeah, they announced their metrics for November this morning, I believe.
Oh, okay. All good things, apparently. So looks like we're coming back to $100. We find ourselves at 100, bouncing off of 99. I find that very interesting. So we'll definitely run some levels on Roblox later. This will probably end up on my list. Adagio has been on the list a lot. Nasty gap down yesterday. But I think I pointed this out yesterday on Adagio, and I think I'm going to point it out again. Notice this candle sizes on all of these during each day. The vast majority of all candles, even this huge candle with volume when it dropped down, really, really tiny candles. This stock trades after hours, right? During the trading day, it is very rare that this stock provides a good opportunity. We don't even need that one, right? That one's gonna. I don't even really care what its news is, but I'm sure it's whatever was going on yesterday. Anything notable there, Norm?
No.
Just scary. Okay. Roku and Baba. Roku. Do you remember Roku back in the day, Norm, when we could just trade that thing long, and just sit in it all day, and it just beast moded straight up? Those were the days.
That was good.
LESL. Leslie's Incorporated, looking $20. I like the price range. Let's see, spread a little aggressive at 15 cents. Daily a little not great. What we got? Anything going on Leslie here?
It's a secondary. This is garbage. This is the pool. This is the pool supply company. They trade 2 million shares a day on average. They've announced a secondary offering. Not worth even watching.
One thing interesting on TI is that its short float is coming in on TI at like 35%. That's a really pretty high short float on this thing. Is that right?
I'm curious if that's. I don't know, because FinViz has it under 10%. So I don't know which data stream is right there.
Come on, TI, step it up. All right, let's see. I like FinViz. FinViz is probably right. Roku. So one thing Roku just jumps out immediately at me is how far below value this thing has been. I mean, it's, your average participants paid $350 a share for this thing, and we're trading way down at $215. I just think this thing has just always seemed a little undervalued for me just as of lately. If this thing can ever get the proper catalyst, it should, want to snap back. But big volume on the top side, and it's been doing a low volume push down. So maybe we're getting near that time. Do we have news on Roku today? We got volume coming in the pre-market as well.
Yeah, maybe there's something fresh out that I just haven't seen yet. Roku was not on the gappers list as of a few minutes ago. It
just popped in. Roku bad
Roku
news?
Universal Electronics issues press release highlighting International Trade Commission ban on import sale of Roku products. That's not good. So
Ooh, that is
I don't know
not
exactly
good.
what that is. I don't know
That does not
what the
sound
story
good at
is.
all.
I don't have anything too in depth, but that's what I'm seeing.
Man. At what point do you just start cutting these positions? I mean, you gotta imagine if the average person's paid, or the average participant's paid per share, $3.51. You're down at 2. I mean, that's a lot of bag holding right there. You know what I mean? At some point, people are just gonna go, and it's just gonna die. All right, Baba on the gappers list again, which I'm not. I keep calling this a gapper is kind of friendly, because it's still inside yesterday's candle. Baba has kind of been doing what I said about that low float stock yesterday, which is something to be aware of, which is lots of small candles. Like lots of small candles. This is one of the China stocks, so we've got that pressure and the other things. But, look again, the question is when you're playing Baba, do you get one of these rare days? Which, I mean, if you look for the past month, you've got maybe 1 day, 2 days, 4 days, maybe yesterday. You've had like 5 days in the past 2 months where this thing's offered a really good opportunity. So it might be worth watching, but it definitely isn't a primary item for me generically at any time now, just because of how poorly it trades from day to day. So let's do this. I think we still have some time. No, I think we have Krita queuing up. You want to switch over and get her going, Norm? And
Let's do announcements real quick, and then we'll hit Krita.
all right, let's hit announcements. All right, you do community events ones. Let's see here, cutting in. Let's hit that.
All right, yeah. Start on the next slide.
Here we go. Gotcha.
All right, guys. Jared unfortunately had to postpone his webinar from last night. We'll announce when that is rescheduled for the next Tuesday, 5 p.m. Eastern, at the special time because of his time zone. Got Eamon talking about trend trading. Speaking of Krita, who we'll have the pleasure of speaking to in just a moment, we have a double dose of her today and over the next 2 weeks. So tonight she's going to be talking about bouncing back quickly from mistakes and losses in your trading as part of her Building Resilience series. And then next week will be assessing impact, FOMO, and over trading, taking the pain out of trading, her part 2. So both of those are at 5 p.m. Because she is in Europe. So just a reminder, Shriners Children's Hospital is the charity of the month for any Super Chat or Super Sticker revenue. Don't forget about stocktradingsimulator.com. You can go to our web-based platform to do our replay and sign up for Simon and Eamon's homework assignments down in the bottom right-hand side. Also, if you are watching on YouTube, haven't been in the chat, you can use the promo code premarket24 to get a discount on the intro membership. That is 7 calendar days, 5 trading days in the room. At the bottom of the screen there, you see that test drive now button. You can just go to bearbulltraders.com, scroll about halfway down the page, click that button, and fill out the form. Use the promo code premarket24. You'll be billed one time. It will not recur. It'll cancel after 7 calendar days. And if you'd like to become an elite annual member, you can use the promo code holidays40 to get 40% off the elite annual membership. And a month of DAS Simulator is included with that. Tor? Hello?
Hey, Norm, I'm here. Sorry, I'm trying to create a slide ready to cut in, and when I looked at my slide isn't showing her video coming into it now because this is just the kind of day I'm having with these things for some reason. So I'm sorry, Creta. I swear I'm not doing this on purpose. So I mean, obviously you're gonna be able to hear her voice, but I mean, maybe I can just actually I have an idea. I can just bring her in video straight in, so you'll just see her video without the overlay, and that should work. So let me bring her in that way.
There she is.
And
good morning, Creta.
Hey, Norm,
how are you
how are
today?
you?
there we go.
Good,
I'm
thank
good.
you.
Can you hear me okay?
Yes, absolutely. We can hear
I
you
will not do this
perfectly.
to her again. She will at least have proper view today.
Awesome. Okay.
All right.
I don't know. There's something strange going on my screen. So
No.
might
You're
just
fine.
jump in.
You're fine. Don't worry about it, Creta, at all. Hear you loud and clear. See you great. Today you're going to be talking about trading on Tilt. So
Yeah.
throw it to you and let you take it away.
Okay, thanks, Norm. So today I'm talking about trading on Tilt and most importantly, how to stop it. And this is coming from a request that I got on Twitter. So thank you for that request. And basically, let's define what we're talking about. So trading on Tilt is when you are in a state of probably emotional agitation, frustration. You've had some trigger that's sparked you off, and you then take a series of actions that pulls you very far away from your trading plan. So maybe you've taken a series of losses and it's really triggered you, and you change your position size. You're taking a much bigger position than you normally would. Maybe you're taking all the setups, so things that don't fit your A+ setup criteria. And the idea is that you're doing this from a kind of impulsive place. So you're no longer trading from a rational perspective. You're coming from impulse, and you're nearly compounding the detrimental effects as you go on. So each subsequent action is compounding the negative effects on your P&L. So that's what we're talking about when we're talking about trading on Tilt, or at least in this little snippet. So I don't want to give emotions a bad rap in trading, because emotions are important and can be helpful to you while you're trading. So if you imagine that if you're in a calm, centered place, feeling patient, feeling stable, accepting the risk in the market, they're all emotions that you're feeling, and you could be trading from that place and be trading very well. But when we're talking about trading on Tilt, we're talking about trading from very challenging emotions. So again, there's some trigger event, and then you start feeling angry, frustrated. Maybe you're trying to show the market who's boss. So you get into a state of emotional agitation. And when you're trading from that state, then your trading becomes more impulsive. But what I'm trying to really bring home to people today is that this is a choice. So think about trading on Tilt like maybe a snowball rolling down a mountain. So at the start of it, the snowball's small, and there's a point where it starts to roll. Now, if you don't stop it in its tracks, it will keep rolling and keep growing and growing, and then maybe there's an avalanche. And that's a visual for trading on Tilt. But you can recognize that there is a very specific point where you've been triggered, the emotions start to rise, and then you have a choice about what to do next. And it's really important that you recognize that you do act that choice, and that you are choosing to take the series of actions that result in this negative impact in your P&L. So in order to try and unpick this, or to stop it in its tracks, the first thing is to take accountability. And another good way of framing this is to think about, at least this is very relevant to the Irish context, and I hope this isn't a stereotype, but I like to think about it when people go on a night out and they drink way too much and they do a load of stupid things, and the next morning then they blame it on the alcohol. And the idea is, well, actually you were in control and you made a choice to have that number of drinks, or in that situation. That's where the accountability comes in. So try and think about trading on Tilt like you are making a choice at a certain point in your trading, and then you're continuing to make that choice. Even if it feels impulsive, that is what's going on. So a way to actually try and stop that is to try and zone in on the moment where this goes wrong for you. So you have to develop really strong self-awareness around this chain of events, because it is a chain of events. There's a trigger. You then are kind of in an emotional state that doesn't support your trading. So you're experiencing all these challenging emotions. And then based on that, you start taking actions that deviate from your trading plan. But instead of thinking about trading on tilt like you have to address the whole thing, and maybe that feels overwhelming if it's something that you engage in regularly, try and think about just mastering this one moment where you have a choice. So the fork in the road where you can actually experience the challenging emotions, but make the decision to address those emotions and to take the next right step to bring yourself back on track. Or you have the choice to indulge in those emotions and to allow yourself to unconsciously then start taking all these actions. So there is that fork in the road. So if you can catch yourself at that specific moment with a strategy, which I'm going to talk about now, then you actually hold yourself accountable, you take responsibility for your actions, and you can actually pull down the negative emotional state that causes going on tilt. So in order to do that, it's really helpful if you kind of come up with a plan that is like a circuit breaker. So one of my clients called it this the other day, and I thought it was a really nice way of describing it. So having a series of actions that's like a circuit breaker to stop you from falling into impulse and indulging the negative emotions and going down that path. So what might that look like? Well, it can be very personally tailored, and sometimes I call this a decision tree. So it's like a series of actions. So you want to make it personally tailored. And to do that, you firstly have to understand what are your specific triggers. So when you go on tilt, what is likely to have happened? So think back around a few examples, maybe recent examples of when it's happened for you, and identify the exact trigger that causes this. So for you, it might be when I've taken 3 losing trades in a row, or maybe I've had a red day, or maybe I did everything perfectly in a trade from a process perspective, but it still went against me and that really annoys me. So what is your trigger? Then try and describe the exact emotional state that you get into when you go on tilt. So be as specific as possible and as detailed as possible. So you might be describing, well, I feel angry. I feel like I want to take it out on the market. I want to get revenge. Try and explain it in great detail. And when you've explained that state, then try and list the actions that you take, the snowball effect that lead to deviating very far from your trading plan. So you've got an understanding of what's going on for you when you go on tilt. And once you have that understanding, then you can actually create this series of actions, this decision tree, or this circuit breaker that you can implement every time you reach that point. So every time you reach that fork in the road. And what would that look like? Well, you would probably rate yourself on the emotions that you're feeling. So let's say that 10 is an optimal emotional state and 1 is full on anger, frustration, rage, whatever you experience when you're about to go on tilt. So you would rate yourself. And let's say if you find that you're a 5 out of 10, then that triggers your decision tree or your circuit breaker actions. And within that routine, so it can just be a couple of simple steps that you put together, but the idea is that you consistently implement this every time you reach that point of challenging emotions where you're about to tip into impulsive actions and going on tilt. So in that series of actions, this decision tree, what you want to do is include some practical action that will help you to pull down that negative state or even just get out of those negative emotions. So it could be something like doing 20 seconds of breathing exercises. So something to shift the emotional state. You also want to make sure that there's some level of taking a break in there. So again, it doesn't have to be a long break, but it could be something like 30 seconds to a minute where you actually step away from your computer. So you're breaking the impulse. So now if you go back and you take all the actions that are going to really, part of that snowball that are going to drag you very far away from your trading plan, you've had some time to reflect, and it's a very conscious choice then when you come back to your computer. So you want something that addresses the emotions, something that creates a circuit breaker, gets you away from the computer for a minute, 2 minutes, 5 minutes, whatever is relevant to you. And maybe you also want to include something that brings you into a more calm state. So that could be breathing. For somebody else, it could even be doing press-ups or something. Like you're just trying to disrupt this impulsivity. So you create your plan and then you come back and you rate yourself again. And the idea is that if you're now, say your emotional state is a 6 or 7 out of 10, then maybe you're ready to trade again and you've stopped that impulse. So you've chosen the right path to go down as opposed to the on tilt path. And then let's say you've done your series of actions and it hasn't helped and you're now a 4 out of 10 on the emotional rating, maybe that's your signal then to stop trading for the day. So that's just a practical way that you can address this, but the results will come from consistently implementing this, time after time, and getting really good at catching yourself at that specific moment where things are about to go really wrong and pulling yourself back. So the more that you can do that, the more you're taking responsibility and accountability for your actions, and the more you'll actually be able to redirect to go down the right path. And then hopefully the fact that you'll be experiencing better profits and losing less money will reinforce the idea that this is the right thing to do. So that's just a very short overview of how you could start to address going on tilt.
Kreda, thank you very much. It's an issue that affects many, many traders. Just a reminder to everybody, if you know somebody that could use this that didn't hear this morning, or if you would like to watch it again at some point in the future, she has a playlist on her channel on YouTube, so check that out. Kreda, thank you very much. I hope you have a wonderful rest of your week and weekend. We'll see you tonight.
Thanks, Norm. See you later.
Take care.
Man, that was just like speaking to my soul, that whole topic of conversation there. I don't know about the rest of you guys, but there's so much of what she said. One word that she really utilized, or phrase that she used, is the concept of circuit breaker. I really like that idea, and I actually, just to support what she's saying, I actually use a circuit breaker in my trading as well. So I recognize that my Hulk happens when I am over goal and then I lose goal. So if I want to make like $300 to $400 a day, if I make that and then I lose it, that has always been the days that have turned into my worst and biggest losing days. So I actually ended up putting in a circuit breaker of my own, which is once I hit that range, I only get single trades. And if I lose them, one trade causes me to stop trading. And that allows me to keep trading while I'm trading well, but keeps me from just hulking out. So great words from Kreda. Thank you very much for your time on that. That was huge. So awesome. So let's get back over this gapper, see if we got any new stuff popping up. Anything interesting grab your attention while we were listening to the brilliance, Norm?
No. I mean, no. I plan on not even being around my computer for much of the day. I don't think it's going to. Yeah, I don't see anything great. I think it's going to be a rough day until we get to through the FOMC.
Yeah, I've noticed that we have these choppy days like this leading into these. Everyone's just sitting back waiting to hear what's going to happen.
You have very few, frankly, FOMC announcement days that are of value. Most of the time, I would say, I mean, I don't have an exact statistic. I'm pulling this out of a box of random guesses, but I don't know, 75, 80%, 85% of the time, the market already knows and could easily guess what actually takes place. As far as the action the Fed takes, this is one of those days where we've had some serious inflation numbers that have popped up. We've had some of the Fed people talking about it. We've had talk about emergency meetings. So, I mean, the bottom line is inflation has not been transitory, as they've said for 6 or 8 months that we've been listening to them to say that. As inflation's gotten hotter and hotter, it's at a point where people are seriously concerned about it. And there's a significant amount of people that are concerned that Jay Powell is, quote, stuck, meaning that he's in a position where they're so far behind the curve. If they do the actions necessary to get inflation under control, that is around 2% or ish, or maybe under, the actions he would have to take are so drastic it would crash the market. There's some people with some viewpoints that there's some political issues going on here. Obviously, in the U.S., we've got midterm elections up next year. The party in power just renominated Powell. Do they want a crashed economy as they go into midterm elections? So a lot of issues going on. We'll see how it works out. Fed meeting was yesterday and today. Fed announcement is always at 2 p.m. Eastern on the Wednesday, the second day of the meeting.
So, and I'm with you there, Norm. One thing that is Jared actually said in Engineering the Markets yesterday, which really grabbed my attention, is the concept, and I really don't think about this at all, and I have since yesterday, which is the thought that cash itself is a position, right? Like having your money out of the market. So if you have inflation, so that your cash is, gaining value against goods in this way, it makes things very, very interesting, don't you think, as an investor, because your cash is devaluing as it sits out, but you've got a market that's not going anywhere as it sits in. So I think it just creates this very interesting, place of maybe indecision that I think we're going to continue. So I don't know if we get choppy for a while or we get a correction or what's going on, but it's certainly interesting. Definitely a different market than I think we've been in before.
Yeah, it's changing for sure.
So all right, well let's try and find some good in the bad here. Now, one thing I can say is on days that I generically don't find a single stock, something always ends up coming up. There will be a ticker out there that will go into play. That will be something we can have an opportunity on, but we may not identify that until the market opens and we see the volume come in. But for now, let's hit these couple of that we threw on here, and then I'll come out to the room and to the YouTube, and I'll grab a couple of tickers. We'll take a look at that, and then we'll get this market to open and see what happens. So I'm going to pop back up to Roblox. Roblox is establishing pre-market low down around 98 currently, but does have a nasty spread and more liquidity to the downside, so it can easily continue dropping today. One thing that I've already noticed is we do find ourselves pretty far outside of the trading range today. So we may get a squeeze at the open as Roblox comes back to VWAP, maybe a little higher, and then reject. We'll have to see what happens on this. But Roblox itself has been downtrending for about a month now. And with the news today, which I believe was not awesome, it could continue in that direction. So we'll have to see what's going on. Still above VWAP. So I mean, we can still drop a pretty good amount without even challenging the average price. So let's see what happens there. One that I'm going to be watching for an opportunity today, I think, is going to be Roku. It wasn't. What was the specific news? Wow, can you throw that out for me? So I put that out correctly. I might have gotten that backwards with Roku or something like that. Roku, I know, had bad news. Maybe I got those backwards. So Roku, looking at the daily chart, I find very interesting. So Roku, back on the 8th, had this big jump with a lot of volume, but that was responded to with a lot of selling, and then now has been, downtrending back towards these lows. But starting to get very compact candles, which last time it got down here, it did the same before it bounced. So I'll be looking for Roku here to see what happens, because if we start to lose this $200 level, which I think looks very psychological, we could really see some interesting things start to happen. Yeah, Morgan Stanley cut Roku down to 200. Thank you, Tund. Highlight international trade ban on imports. That's Roku. What was the one on Roblox? Shares are trading lower after the company issued average bookings per daily active. Oh, okay. So bookings are down 10% year over year. Yeah, so that's not great. All right. So what else we got here? Let's pop over. We had I threw low up on here because it just jumped onto the list and then it jumped off. Low has a really wide spread and it can be very difficult to trade. So I probably will take this off the list. But Lowe's has been, doing a lot of work trying to get more of the market share, I know, from Home Depot on this whole thing. They've been in a really nice uptrend for quite a while, but did they got like an earnings today or something? I'm not sure. Might be muted. Let's see. Baba down in that base area we talked about. Let's grab some tickers. What do you guys want to look at anything in particular, since we don't have anything jumping out? We can do LCD, AMD, Microsoft. Hey, Ryan, how's it going, buddy? All right, how about from the room? What do you guys want to see from YouTube land? I'll get a couple from you guys too. We got El Cid, AMC. AMC had a really good day yesterday. Hey Norm, I see you're. Are you talking, buddy? I don't hear you if you are. I don't see audio feed coming in on you. All right, I think he's muted. Maybe. So how you doing, Brian? How's the profit of profit? Yeah, I think there's going to be more of that. So we got all those announcements coming up. We had a lot of indecision yesterday. As I go through a lot of these charts, I'm seeing like tons of indecision to the from yesterday. It'll be interesting to see what it picks today. Ooh, AMD I like. AMD, you're asking me to look at AMD. I like AMD. AMD sitting near this like S4 level that I use. Right down here on the Camarilla pivots. Had a nice kind of, even with all the selling that went down yesterday, AMD actually bought up with some volume. So I find that very interesting. If the market should decide to bounce today, that could actually be pretty interesting because we get some really nice reversals off of this level. So AMD, I'm going to keep on my list today. I like that. Yeah, AMC as well. Yesterday, AMC bought up almost the whole day on strong volume. Yeah, yeah, the Wall Street bets guys getting the party going. Well, here's what I'll do, Brian. I'm going to go ahead and cut the pre-market show, and I'm going to move this over. I see Andrew's coming in on the main chat. Hey, boss, good to see you. Everybody, thanks so much for hanging with us for the pre-market show. I think you guys got a real treat with Created today, so make sure you keep your eyes out and check that out again. Thanks, everybody, for this time. We'll see you all tomorrow. Thanks.